Holly Garofano from the New York State Association of Salon and Spa Professionals and also the owner of Nuance. And I am joined today by Kelly Sapoznik, principal at the Bonadio Group. And Kelly's going to share with us some tips about how we get through the end of this year into tax season. So thanks for joining me today, Kelly.
Yeah, thank you so much for having me. I think this is a great time of year to get into this.
Yeah, and start talking about the end of the year,
yeah,
right?
Yeah, definitely.
So tell me, what are the top 5 things we should know as business owners and booth renters and stylists and barbers and all that stuff as we get into the end of the year?
Yeah, definitely. This is the perfect time to talk about this. I want to make sure that you all have all of your records and your documents in order. I know that as the year goes on, we tend to get busy and just throw everything in a shoebox and put it under the bed and forget about it. Maybe have it in a purse or have it in an old bag. But I want to make sure that as the year ends, that you have every single document and every single receipt so we can reduce your income by all the expenses that you've had. I don't want to have to put $1 more on your income tax return than you need to. So please make sure everything's in order. I also want to see you pay all your bills.
That's always a good tip.
Yeah, this goes more for you, Holly, as a salon owner than just for people renting a booth, because you have the bills of the whole salon. But I want to see if you have an electricity bill that comes in at the end of the month and you say, oh, I'll pay that on January 5th, that's when it's due. Well, what about if you pay it on December 29th? Then I can use that bill to reduce your income. So yeah, so the more you pay now, if you have a little bit of extra cash at the end of the year, which I know that's like a joke, but if you do, the more you pay now out of that business account, the less you're going to pay in taxes this year. And as accountants, as tax accountants, we always worry about this year before we worry about next year, because as you can see from what's happened in the past year, we never know. New legislation will go into place throughout the year. So we always are going to say, let's worry about this year, and next year the tax rates could change and we'll worry about then. So
good to know, good tip.
Yeah, I know, this is so fun,
I
right?
know, it is, yeah.
Also, if you guys are thinking about making any big purchases, maybe you want to redo your salon, maybe you need more chairs, more sinks, expensive equipment, the best thing to do is to buy it now. Even if you need to put it on a credit card in December, if you buy it in December, you can deduct it in December. And usually, like, I don't know how much a chair would cost, but anything that's thousands of dollars, $5,000, $6,000, you can deduct that all in the current year. So the key here always is to reduce that income. If you get to the end of the year and you do have some extra money sitting around, another way to reduce your income is to start a retirement fund. As business owners, we don't have a company putting away retirement money for us, and that's really important because time is ticking, and you definitely want to get that started.
Yeah,
so for every dollar you put into a retirement fund, you save about 30% in taxes.
Wow.
So if you put a $10,000 contribution away for your future, which you're going to get down the road, you'd save about $3,000 in taxes.
Wow. That's
so,
awesome.
Yeah.
That's great.
Yeah, good. You're welcome.
What else?
So I just want to touch on a couple of the major changes for 2019,
Yeah.
not just relevant to your industry, but relevant to the people that are working in your industry that have families. We hear a lot on the news and in tax, presentations online about how the itemized deductions have changed, and now instead of itemizing, a lot of people are going to be taking the standard deduction, which is now $24,000 for a married filing joint couple. However, sometimes that sounds appealing to us, but I want everybody to remember that the personal exemptions have gone away. So we might have gained something in the itemized deductions, but we're losing something in the personal exemptions, which means that could be a wash. So when these tax bills are sold and marketed to us, and people are looking for votes, they're only talking about the good parts.
Right.
So I want you to remember that could be a wash. And I'm available for questions if anybody wants to know any more details about their specific situation.
As business owners, are there things that we should keep in mind that would be different if we were an independent contractor or booth renter?
Yeah, there is one exciting thing that actually is for business owners and booth renters. But now, in addition to, I'm assuming that most of you file a Schedule C, I know you do. In addition to all of your regular expenses, you report your income and all of your expenses, there's a 20% additional deduction that you automatically get.
Okay.
So that is exciting, and that is kind of flashy, and that's not offset by anything else. The child tax credit has also increased. It's doubled, actually. And one other thing, if you are a W-2 employee, and I'm guessing that most of your people are independent contractors, but if you are a W-2 employee, there's been some major changes in the deductions that you can take on Schedule A. Basically, if someone's getting paid from you as a W-2, they're going to be able to deduct, they were able to deduct their expenses on Schedule A.
Okay.
And now those expenses are no longer deductible. So it really is beneficial for everybody listening in this audience to be an independent contractor. And if you're not, you know, talk to Holly and she can get you in touch with me and we can kind of talk about that a little bit more.
Sounds great. So let me know, like, is there, if we file early, is there, other than peace of mind, right, for getting all that paperwork done and out of the way, is there any benefit to that?
Nope.
No.
Believe it or not, I know everybody wants to get their taxes done, but actually studies have shown that the longer you wait to file your taxes and if you extend them, that there is less audit risk to people who file like in September or October than there is to people who file in the spring. So if you don't have all your records in order, as I'm advising you to, and you want to spend a little more time getting things done, you can wait. It doesn't increase your audit risk at all. However, I want you to know that an extension of time to file is not an extension of time to pay. So if you extend your taxes in April, it can't be because you don't have enough money to pay your taxes. The IRS will always work with you on payment plans. The IRS, honestly, I work with them every day and they're not as scary as people think. I know they're a scary entity, but they really are understanding and they just want to work things out with people.
It's good to know as well.
Yeah, and just a little tidbit of something that I heard this year, that I heard recently that I'm not so happy about is that I heard that they may be extending the filing season this year because there's so many changes and the employees at the IRS are not in place to work on all these new changes. So there's, tax season might go on until June or July. And I'm like, I hope not. But
which is great if you need a little more time to get that done, but not great if you're a tax professional.
Yes, exactly.
Extends your season.
Right. I'm not looking forward to an extension.
Oh, wow.
Yeah.
And one of the other questions we wanted to ask you was, you know, insurance is a big deal for our industry, right?
Yeah,
a lot of us are self-employed, and so it's expensive to have to go to the market and purchase insurance. And so are there tax implications for us if we choose not to carry insurance?
Right. Yeah, actually, so Obamacare was enacted and made you actually have insurance. You were penalized and quite heavily on your tax return. You were penalized if you didn't have insurance, and you would kind of do cost-benefit analysis every year. How much is my penalty? How much would I pay for insurance? What are the risks and chances of me needing this insurance? And you know, as the years went on, the penalty went up and the cost of insurance stayed the same, so people were starting to get insurance instead of paying for the penalty. However, as of 1/1/18, that is gone. You no longer will be penalized on your tax return if you don't have insurance. Now, I'm not advising you not to have insurance. I'm just saying the tax people can't penalize you for not having insurance. So,
that's good to know.
Yeah, so that was a change that was good, a penalty that got taken away.
That's great.
Yeah.
Well, those are some great tips, Callie. Thanks for coming today and sitting with us and sharing so many great tips to get us through the end of this year and prepared and ready for 2019. Don't show up to the accountant's office with your shoebox full of receipts. At least buy one of those nice folders and get your stuff together. So, and if you have any more questions, please feel free to reach out to me, or you can reach out to Kelly at the Bonadio Group. And before we leave today, Cal, so just a couple other quick questions. Early bird or night owl?
Definitely early bird.
Early bird.
Up at 4:30 and bed by 9.
Oh my gosh.
Yeah.
No, not me. Not me.
No.
Cake or pie?
Pie.
Pie. Me too.
Apple.
Apple.
Yeah.
Yeah, apple. Good American pie. Apple. And one last question: Thanksgiving or Christmas?
Thanksgiving.
Yeah.
Yeah, I love Thanksgiving. I love the whole meaning behind it. Christmas gets so crazy.
Yeah, it's nice to
But they're both really fun.
They are both really fun. Well, thanks again for joining me today. I appreciate it.
Thank you so much for having me.
Yeah.
It was so fun.
Yeah, it was. And enjoy the rest of your day. Join us again for another video tip.